In this video, I'll go over a quick and simple beginner's trading strategy using nothing but exponential moving averages, also known as EMAs. We'll use 3 of these, and don't worry if you have a free plan and can have more than 2 indicators on the chart. I'll give you my 3-in-1 EMA indicator for free. Before we begin, I want to give a quick shout out to an amazing futures trading Discord community that you can join for free with the link in the description. Check it out. Alright, so like I said, we will need 3 EMAs on the chart. So, head over to Indicators, search for EMA, and click it 3 times. Now you've got 3 EMAs on the chart, and it is this line over here. You only see one here right now because by default the length is the same for all. So, we're going to change that and customize them to our strategy. Go to the Settings. In the Inputs tab, change the length to 10. And in the Style tab, change the color to red. Then go to the settings of the second one. Change the length to 25. And color to green. And finally, for the third one, you'll set the length at 200. And the color to white. Now your EMAs will look like this on the chart. Let me explain now what each of them will do. Let's turn off the 10 and 25 for now. So, this white 200 EMA will be our main trend. If the price is above this EMA, we will only look for long trades. And if it's below the EMA, we will only look for short trades. You always need to know what the bigger picture trend is so you do not take counter-trend trades. As a beginner, counter-trend trading can be seriously detrimental to your trading account. Basically, what this EMA is doing is using the last 200 candles and calculating the exponential average. So, when the price is above the EMA, it tells us that the price is stronger than the exponential average of the last 200 candles, and this tells us the market has strength. And conversely, when the price is below the line, it tells us that the market is weak because it is trading below the last 200 candles exponential average. These 10 and 25 EMAs will act as our buy and sell signals. When 10 crosses above 25, it signals an upward momentum. And 10 crossing below 25 signals a downward momentum. So basically, when our main trend is long and the short-term momentum changes from downward to upward, it signals us a buy. And when our main trend is short, and the short-term momentum changes from upward to downward, it signals us a sell. Now I know many of you will not have a paid plan of TradingView, so you cannot use all 3 of these indicators on your charts. I have a solution for that. I have coded an indicator which includes all 3 of these EMAs, and also shows us buy and sell arrows right on the chart. This is how the indicator looks like. Everything in the indicator is already coded, and you just have to apply it on your chart. The 10 EMA is in red color, 25 in green color, and 200 in white color. On top of these, I have also coded green arrows for cross-ups, which mean buy signals, and red arrows for cross-downs, which means sell signals. I'll leave the download link for this in the description below. You'll get the source code and you can use it in your own TradingView. Alright, now let's take a look at a few trade examples. The price is above the 200 EMA, so we will only entertain buy signals. Here we get a buy signal. But we do not get a trigger. So, we wait for next signal. Once we have a buy signal, we will place the entry order a couple of pips above the high of the candle, and the stop loss will go couple of pips below the candle. Targets depend on what you like. Smaller targets will give you higher win rate but smaller gains. Bigger targets will give you lower win rate but bigger gains. In this example, I'll set it at 1.5 times the risk. We do not get a trigger, so we will move the orders to the next candle. Now we have gotten the trigger, and we are long. And our target gets hit. Let's try a short example now. Here, the price is below the 200 EMA, so we know we will only look for sell signals. we get a sell signal here. We will place the sell order a couple of pips below, and the stop loss a couple of pips above the candle. For target, we'll do 1.5 times the risk again. We do not get a trigger, so we move the orders to the next candle. And our target gets hit. Now, let's do another long example. But this time, let's set the profit target at 4 times the risk and see what happens. And our target gets hit. Here, we got a short signal. We'll place our entry and stop loss order. And for target, we'll do 4 times the risk. We let the trade run. And target hit. Now, it is important to understand that both trade management styles will work. If you go for 1.5x targets, your win rate will be higher. But if you go with 4x targets, your win rate will be lower but gains will be higher. This strategy will have losers most definitely. All strategies do. But what makes us profitable is how we manage the trades. Ask any millionaire trader and they will tell you, it's not the strategy. It's the trade management and psychology that makes a profitable trader. If you have any questions about this strategy, feel free to ask in the comments below. See you in the next video.